Beyond the Bell, Bloomberg's comprehensive cross-platform coverage of the U.S. market close starts right now.
And right now, we are 2 minutes away from the end of the trading day, the end of January. Romaine Bostick here alongside Katie Greifeld. We're counting it down to the closing bell, and here to help take us beyond the bell. It's a global simulcast with Carol Massar and Tim Stenovec. Welcome to our audiences across Bloomberg Television and radio, as well as to the folks joining us streaming on YouTube. Carol, a pretty strong finish to a month that I think a lot of people saw as a great relief rally. The question now is, does this persist beyond January?
Well, it's certainly persisting here in the last few minutes of trading. I'm kind of shocked to look at these charts here. S&P, Dow, NASDAQ, you're seeing buying into the close in these last few minutes of trading. I really was convinced that this was going to be a mellow day ahead of that Fed meeting tomorrow, Tim.
Well, I'm just wondering how Jay Powell and other members of the Federal Reserve Board are looking at, a rally like this. Not today, but just for the month, where the Dow's higher, the S&P 500 is higher by, close to 6%, the NASDAQ shooting higher. I mean, it's the best January in years, all at a time when, financial conditions are at a place where they were last February, before the Fed started hiking.
And it's not just the big benchmarks either. I mean, you have all sorts of risky assets rallying in January. Of course, I'm talking about Bitcoin. I'm also talking about CCC rated debt, the riskiest parts of the bond market, truly in everything rally.
Truly so. I mean, we were talking municipals a little bit earlier, a 3% rally on the month, one of the best months we've seen there, I think, in at least a decade. And then you talk about some of the other asset classes, whether risky or safe. Yeah, it really was everything. The question is, do those correlations start to break apart? Do we go in a different direction? A lot of earnings on tap today, as well as for the rest of the week. The Dow Jones Industrial Average going to finish the day higher by more than 300 points, almost 400 points, up about 1% on the day. The S&P 500 up by almost 60 points, or 1.5%. The NASDAQ Composite up 190 points, or about 1.6% here on the day, while the Russell 2000 relative outperformer up about 2.5%. All of the major indices higher on a monthly basis. The NASDAQ in the double digits, up about 11%.
Yeah, and as we pull up our earnings screen and wait for some earnings after the closing bell, I'm thinking about the earnings from those home builders once again that really pushed that group overall higher today, Katie. Overall, if you look at the S&P Composite, home builder composite, up almost 5% in today's trade.
I'm thinking about the industry groups because there's 24 of them and all 24 are in the green. Of course, as we count down to those earnings, to the Fed, you see what's up top. It's the autos following those GM earnings. You also have transportation and materials higher as well. You look down the list, there's not too much to pick at, but utilities, some of those consumer stocks at the bottom, Carol.
Yeah, I want to stay with the automakers because I agree. That was a group that really caught my attention when I was picking through and looking for some gainers today. GM, you mentioned it, Katie, up 8.3%. Certainly a standout in today's trade, and definitely saw that move higher, as well as Tesla, which was up about 4%. I know we have some earnings going through. Do we want to go to them, guys?
Well, let's go through a couple of them here real quick. Amgen crossing the wire. I will start there. Of course, ticker AMG. And company announcing basically their 4Q numbers. The adjusted EPS coming in at about $4.09. That's basically on the nose of what the street was looking for, which was $4.08. So a penny beat there. As far as the revenue numbers, a little bit lighter than what the street was looking for, $6.8 billion. Actually, I should say that's actually pretty much on the nose of what the street was looking for. So it looks like Amgen, guys, basically meeting the consensus expectations of the street, at least on the top and bottom line numbers.
All right, so Amgen coming across, and we're watching that one. Electronic Arts also coming out with a few headlines here. Fourth quarter net bookings, so we're looking at some outlook here, 1.68 to 1.78 billion. That seems like it is light because the estimate that's out on the street is 2.2 billion, 2.22 billion to be exact. Looking backwards, third quarter net bookings, 2.34 billion. That too was a bit of a miss, 2.44 billion. Interesting in terms of the gaming space and kind of an opener to some of the other numbers. That stock, Tim, it looks like it's bouncing around. It was down a bunch, down about 6%, unchanged. So we're seeing some volatility in the after hours.
All right. Well, I'm looking at the CFO statement here in the press release. Quote, as market uncertainty mounted during the quarter, this is for EA, we took measures to protect underlying profitability. The company's CFO, Chris Su, continuing, we are prioritizing the player experience, directing investment to where it can have the most positive impact for our players and on growth.
All right, I'm still taking a look at EA because you can see the stock really tanking after hours, down almost 7%.
Yeah.
This is a little bit interesting because you think about the expectations. Bank of America was actually out with a note yesterday saying that the expectations, the consensus rather, estimates for this company look too low in the quarter. So you see, you compare that to the numbers we're actually getting, it doesn't quite stack up.
It'll be interesting to see. We'll dig into that. Of course, we still are awaiting earnings out of Snap, AMD, a few other names here on this Tuesday afternoon, guys. But you go back to some of the performance that we saw in January. And more importantly, I know, Carol, you were about to go through some of the gainers on a daily basis. But I was taking a look at some of the big movers that we saw on a month-to-date basis, year-to-date, if you will. Of course, Tesla belongs in that group, up about 41% here. But also, I thought it was interesting. Yeah, Western Digital rallied 39%. We're going to get earnings out of them in just a few minutes as well. And then it was actually, well, a lot of the streaming services, the Paramounts and Warner Brothers of the world. In fact, Warner Brothers Discovery, a biggest gainer in the S&P 500 this month.
I mean, it's essentially companies that just got beat up last year, Romaine. That's what's so interesting about this. I mean, do you think there's, back to Tesla, do you think there's anything fundamental about the Tesla rally? Because at the start of the year, at the end of last year, I mean, all we could talk about was how close Tesla was getting to $100 a share.
I think it remains to be seen here exactly what people are trying to price in with regards to that rally. I think you can make a case for some of the other names that they really were maybe kind of the baby thrown out with the bathwater, and a lot of people recognizing that at those valuations, maybe now was the time to get back in.
At some point, there's an entry point, right, for some investors. I'm just looking
and we should point out, Carol, that's different for everybody, right?
Absolutely, absolutely. But, you know, you look at some of the standout groups here. Consumer discretionary up almost 15% here in this first month. Communication services, this is a lot of the companies that are going to be reporting, these big tech names. They're up 14%. It really does feel like risk on trade. And Romaine, that we're buying into this economy reopening.
Yeah, and just speaking of Western Digital, the earnings, we haven't quite gotten the earnings yet, but we are getting some news crossing the wire on them. And this actually has to do with an investment by a bunch of funds managed by Apollo. Western Digital actually saying that it's got a $900 million convertible preferred equity investment. This is led by the Apollo managed funds here. Interesting to see exactly where this goes here, because the conversion price is at $47.75. The shares today closed at around $42. So interesting to see why they're doing this here. Their numbers now crossing the wire for the quarterly report, and they're looking at an adjusted loss per share of about 42 cents a share. The street was looking for a loss of 12 cents a share. So this is a pretty big miss here on the adjusted loss per share. As far as net revenue, that came in slightly higher than estimate at about $3.1 billion. The street was looking on average for about 3 even. Your forecast going forward, 3Q revenue, a range of 2.6 to 2.8. That is lighter, lighter than what the street was looking for, which was about 3.1. So a big mixed bag here for Western Digital, guys. It appears to be providing guidance below what the street was looking for, and an interesting convertible investment being led by Apollo that could be dilutive to some existing shareholders.
Yeah, shares down 6% in the after hours. I'm looking at what the company's CEO says in the press release. He said that we're continuing to take action to reset the business in response to post-pandemic environment by optimizing our cost structure and strengthening our liquidity. He said they're strategically reducing CapEx across both Flash and HDD and our operating expenses, as well as amending our financial covenants and securing recent financing. That'll give them the flexibility and optionality to weather this cycle, Katie.
And we also have some earnings crossing from Mondelez, of course. It looks like the fourth quarter adjusted EPS beat the estimates. We're talking about 73 cents there. The estimate there had been for 70 cents. So that's the good news. So you look at fourth quarter adjusted margin, it's a little bit light. We're talking 36%. The estimate had been for 36.7%. You look at the after hours share reaction, pretty much unchanged as we sort through these numbers here. We had been expecting price increases to maybe offset some falling volume. Maybe that would be good for margins. Didn't quite pan out.
Yeah, I'm looking at the press release here coming from the CEO, of course, Dirk Van de Put, and he talked about we also continue to deliver strong marketplace execution and amid challenging operating conditions and continued macroeconomic volatility. Talked about strength in emerging and developed markets as well as solid contributions from their recently acquired businesses. So getting a little bit of an outlook, looking for a little bit more on costs here.
Yeah, what I'm really interested to hear from the company when they do their earnings call is the pricing power that they have and what what they're seeing from consumers across their portfolio of different snacks. If they're seeing them trade down, if they're seeing prices have to increase, if that's hitting consumers and consumers are deciding to spend their money elsewhere, Romaine.
And I think it's interesting because we've seen a few of the other consumer staples companies report already, pretty much the ones in the food space here. And it has been a sort of a story of that pricing power finally starting to wane. We heard that, of course, out of P&G, Kimberly-Clark, and a few other companies here. Interesting to see what the commentary will be on that call out of Mondelez.
And it comes to this question of how does a company protect margins then? You have to cut costs, and that leads to all the layoffs, all the other cost-cutting measures that we have seen. But it seems like the consensus
and how much room do they have?
Exactly.
Though? I mean, we talk about the tech companies being bloated. You can't really make that case that a company like Mondelez was ever bloated.
For sure. I mean, that gets back to the expectation that you're going to have to see more compression in those margins.
Yeah, go ahead, please.
But what's the end result of that? I mean, what's the end result?
Well, you would expect stocks to go lower, and that hasn't happened so far. Maybe, it's priced in already. You could make that case, but quite a rally that we just lived through in January.
It's exactly what David Costin said earlier, the clip that Carol played. I mean, the concern about margins moving forward.
On that point, Western Digital saying that it's a gross margin for the third quarter, its fiscal third quarter, is going to be at 9% to 11%. That's down from an estimate of 20%. So that's a pretty big variance based on what the street was expecting and what the company is guiding to.
That's why it's important. That stock down about 6.7%. Amgen down just a hair in the aftermarket. And you've got Mondelez down about 1.4% as we await for those Snap earnings. All right, guys, that is a wrap.
And AMD.
Oh, yeah, sorry. Thank you. Thank you for that. All right, so a few more earnings still to come. All right, that's a wrap. Our cross-platform coverage, radio, TV, YouTube, and, of course, on Bloomberg Quick Take. Beyond the Bell. We will see you again, same time, same place tomorrow.